So what's the longer-term impact on the markets here and overseas as the euro stumbles and the dollar gains strength? Well, it's not just cheaper oil prices.
50 and a half.
Falling oil prices have been getting the headlines lately, but with the U.S. economy picking up steam since last spring and Europe seemingly on the verge of economic stimulus, the dollar looks pretty good right now. But a stronger dollar has consequences for stocks.
If you look at the Dow, it's not just the two energy stocks that are dragging it down. Among the other leaders are people like Caterpillar, people exposed to the world economy. So this is a sign that things may be slowing down, not only in Europe, but generally.
Caterpillar and other companies that do a lot of their business outside the United States are finding their products more expensive to sell. If earnings suffer, well, you know what happens to stock prices. Likewise for big retailers selling not only overseas, but to tourists who are suddenly finding it more expensive to buy here. Think Macy's, Abercrombie and Fitch, and Tiffany, which noted back in November that foreign tourist spending in the third quarter of 2014 was flat compared to the year before. So what happens next? If, as most people think, the Fed begins to raise interest rates later this year, the dollar may get more expensive. But there may be a bright side: cheaper imports here in the United States. Falling oil is holding down prices at the gas pump, and other cheap imports could mean low inflation numbers. If that, in turn, becomes a stimulus for exporters like China, Japan, and especially Europe, it could be a good thing for the global economy.
Where does the global economy need demand? It needs demand in Europe, it needs demand in Japan, it needs demand in China. And when I think about it from a US perspective, I'd almost rather have Europe grow a little faster than have the US grow a little faster right now, because we really need Europe to recover.
Longer term, then, a rising dollar isn't painting a dire picture, but short term, it looks like a choppy stock market. Of course, if the road keeps looking this bumpy, we might begin to use the high dollar and low oil as an excuse, the way we used a tough winter last year to explain why stocks were down.